All right, everybody. I am really excited to kick off the last session of Stablecoin Day. Thank you to our amazing sponsors that have helped bring this together. Borderless.xyz, Bridge, Fortify, Turnkey. I have to cheat and look at the TV. Wallet Connect, Persona, Ocelar, Monad, OpenPaid, Alio, and B2C2. Thank you. This is why Alex is the product guy and not me, because he's pointed out that there's a TV right there. And we're, of course, super excited to be co-hosting with the Stablecoin team and This Week in FinTech, who have absolutely nailed it on this event. So the last panel, we had a lot of complaints about the fragmentation and the amount of tokens and blockchains that are being issued. So I'm excited to present the people that are behind this problem, the VCs that are funding all these stablecoins and all these blockchains that are being created. But no, I jest. We are going to talk about why VCs are betting on stablecoin adoption as a major trend that's going to revolutionize finance. So I'm really excited to bring up on stage Evie, an investor at Flourish Ventures, Mike, a GP at Galaxy Ventures, Adams, principal at QED Ventures, and then we're going to have CJ, GP at Amity Ventures, moderate. Please, guys. The one that I have? Yeah. I think that's... Yeah, just maybe sit in order of the picture. Sit in order of the picture. Looks perfect.
Great to see you.
Hey, man. I'm Mike. Hey.
Great to see you.
All right. Well, thank you, everybody. I think maybe to start, we'll do the basic just introductions, but to make it a little more interesting, besides just you and your firm, include something that you guys are thinking about, focused on, some spicy take or something, some view that your investment committees have that might be a little against the grain, or an area that you guys are focused that might be different than just the conventional dialogue that we're all hearing about here at Money 2020.
I'll start first.
Yeah.
Hey everyone, I'm Mike Giampapa. I'm a general partner at Galaxy Ventures. Spend most of my time at the intersection of crypto and fintech. That was sort of like a dirty word in the crypto ecosystem for a long time. I'm traditionally a fintech investor and happened to be an intern at Circle the summer that they launched USDC, and got to see sort of the birth of stablecoins in the US. And when I saw that, I didn't really get it at first, to be fair. But after a few months, I said, that is financial technology. And so here I am now, really spending most of my time at this intersection. Spicy take, I don't know. I think a lot about the positioning of the incumbents, the banks and the traditional remittance companies. And I think a lot about how startups in our portfolio can try to unseat them. I think it's going to be really hard, frankly. They have huge distribution advantages, huge capital advantages. And so, we spend a lot of time trying to think about parts of the market where the incumbents don't have an edge, and it's more challenging to figure out than I think we may give credit for.
Hi everyone, I'm Evie. I work at Flourish Ventures. We're an $850 million fintech and insurtech fund. Half of our capital is deployed in emerging markets, so looking forward to bringing that perspective. And an area I'm really curious about, I think jumping off this point around other areas that are non-payment, where kind of crypto infrastructure can be quite interesting. I think a lot of folks are thinking about sort of tokenizing credit card receivables, for example, which I think is fascinating. If someone is sitting in an emerging market and they're trying to get access to credit, that's super difficult, but there's a whole lot of DeFi pools that could be interested in taking on that risk. So that'll be one area that I think is increasingly interesting.
Hey everybody, my name is Adams. I'm with QED Investors. We're a fintech-focused global fund, and similar to Flourish, invest in a fair amount of emerging markets. And for that reason, stablecoins are probably one of the most exciting things to ever happen. We see fintech and stablecoins are going to be one and the same. During, perhaps a hot take, but during the last wave of fintech, we saw people change how they interact with their money. New apps, new user experiences. It was all incredible and amazing, and that side of the conference can tell you all about it. But the exciting thing about stablecoins is it changes, and blockchain technology more broadly, it changes actually how money works. And that's really the first time we've seen a transformation in how you can store money, move money, lend money, particularly globally, is a really exciting time.
So each of you guys has made investments, and your firms have made investments into stablecoin companies. More notably, over the last few years, this pace has been picking up. Focus on the area itself has been picking up. Why now? What have been some of the enabling things for your teams and your committees to get comfortable going into equity positions in stablecoin companies? And then what are some of the barriers still that you guys are looking at from kind of a macro perspective that still need to be cracked for this to really accelerate and to get even more comfortable?
Well, I would say it's a combination of the infrastructure scaling to a place where we can now do payments at scale. And 2 or 3 years ago, the technical infrastructure, the liquidity in the market that was built up largely around a trading use case is now sizable and is now at the scale where it can actually be used for cross-border payments and a whole set of other use cases. So you start to see the early signs of that evidence. You can look at all these different charts: stablecoin supply, number of wallets, holding, transacting in stablecoins each month, things of that nature, right? And so you start to look at, pick your favorite chart, and the momentum there. I think obviously a huge tailwind was the regulatory clarity here in the U.S. And so those are some of the things that make this trend a little bit different than what we've seen in the past.
I think for us, we actually started investing through off-ramps in emerging markets. And I think the last crypto winter with Silvergate kind of coming down, there was a big gap in the market. And when that gap showed up and the likes of Bridge started raising, we started thinking about investing in the US and building that infrastructure. And I think there was also a mental shift for crypto builders where they sort of moved away from the trading infrastructure to creating more sustainable and long-term businesses. And I think that was a big unlock for us to start looking elsewhere. And I think people have also gone pretty creative as well with what they're doing with smart wallets and kind of connecting, existing payment companies on chain, which I think is not something that people were really thinking about before. So those were sort of the big unlocks.
One of the exciting things that we've seen happen over the past 12 months is our portfolio of stablecoin businesses is growing, whether we're investing in stablecoins or not. We've got portfolio companies that when we invested were normal fintech companies, and now they're stablecoin companies. And that's a really important thing for any industry, and in particular that's due to the infrastructure that's been built that can allow for that transition to happen. A couple years ago, it was just too hard. You had to change everything, your business model, your tech stack, everything in between. Now, a few API integrations and you can get up and running. The piece that we're keeping a very close eye on, that we're excited to invest in, but also see as a continued limitation is anything in liquidity. We need more money in this space. We need to start talking and working in tens of billions, hundreds of billions, and even trillions. And right now we're still measuring things most of the time in millions, sometimes single-digit billions, with perhaps the exception of Circle. But we're looking for much, much more scale to realize the opportunity that I think we all in this room think is there.
Just to answer your question in terms of blockers, because you started touching on one, liquidity is a huge issue. I think a few years from today, hopefully not too far away, this notion of on and off ramping is going to disappear. Like there will no longer be this concept of, or maybe I'd describe it as a bottleneck, right? This bottleneck of every single time I need to touch the traditional financial infrastructure, it takes 2 to 3 days, right? Like that should disappear. There's market structure ideas that are being tested in the market right now, something like a clearinghouse type model that would alleviate some of those bottlenecks. But liquidity, compliance is also another, I think, will be a persistent issue in the space. Maybe one hot take of the day is it is, I don't want to say simple, but we've seen a lot of companies get to $1 billion of volume or a few $1 million of run rate revenue. It's non-trivial to scale well beyond that, and a big part of that is again going back to this bottleneck of you're reliant on your banking partners and their correspondent banking partners, right? And as soon as volumes really start to scale meaningfully into the billions and the trillions, like everyone says, whoa, like what's going on here? Pump the brakes, like let's RFI this flow as much as possible to figure out what's going on. And there's a lot of low quality volume out there in the world that is finding its way into these stablecoin businesses that needs to be frankly rooted out, and compliance standards need to be put in place so that the industry can scale as a whole.
I'm sort of curious because I think on the liquidity front, I completely agree we need more liquidity. There's a question whether we should invest in people that are bringing that liquidity, like going to actually acquire businesses in emerging markets, especially where the biggest demand is, and acquiring, like users, or do you need to partner with an existing bank? I think a lot of people are trying to partner with banks in the US. I actually would flip that, and I would want people to go and partner up with emerging market banks that have the liquidity and are sitting on the billions of dollars, but just don't have folks coming in and selling them wallets or helping them, on ramp. And I think there's kind of that shift that needs to happen. Everyone's trying to sell to Stripe. But I'm just really curious if there's going to be more businesses actually like going into Lagos, going to the Philippines, and working with those banks.
Shout out to Chris at Yellow Card for doing a fair amount of that, because I couldn't agree more. There's a huge opportunity there, and the banks that we speak with that are in those emerging markets, they want to play ball. So this is there's untapped demand there.
But I will say though, one black swan that a lot of people don't look at is emerging market central banks are not just going to watch dollarization happen to them. I think we've seen a couple examples of that happening, especially in Nigeria. I'm curious to see what a Genius Act looks like in each different country. A lot of people are using sort of vast regulation as sort of, again, regulatory arbitrage. I'm going to mint a local currency stablecoin, so that looks like a local transaction, and then swap that into USDC. That's only a matter of time before you go to jail. And I think that's another hot take is, when you're working in emerging markets, make sure that you're aligned with the local regulation and you're working with a regulated entity. Again, speaking about sketchy flows as well, that's a huge issue as well when you're working outside the system. So a lot of people are excited with what's happening in the US, but also pay attention to other regulation.
I'll build on this compliance piece because I think it is really important. Ultimately, many stablecoin businesses, the core IP is risk management, compliance management, and regulatory positioning. That's kind of it. If you think about it, often the technology you're using is open source technology. So you can't be a payments business, and maybe you're at the application layer, in which case you can acquire customers. But if you're not managing compliance, and there's a question I always have, like, well, what are you? That's some of the most important IP that can be built. And the piece that I think you've both called out here, but I'll emphasize, thus far scaling globally has been hard, but not impossible, because there aren't regulations yet. Well, that's changing. As we start to see regulations come online in a country-by-country basis, that Rubik's Cube is going to grow in exponential levels of complexity. Having a team that's set up, that's ready to handle that and manage compliance across multiple corridors is imperative, and will be a tremendous moat if you can build it.
Yeah, totally agree. Building on that, I think looking at Stripe, Visa, PayPal, you're seeing stable coins creep into mainstream rails. One thing I found really interesting, depending on the background a lot of people come from, if they're from the crypto world, they really have the identity of the issuer. It's important, and it's very public and forward what actually is going on with the stable coins. A few of you kind of touched on stable coins starting to become invisible. We talked about enabling things in the landscape over the last few years to get you guys to where you are now. As you guys look forward and make investments, how are you thinking about the future of, is it something that just integrates into fintech and becomes its own thing? Does it maintain some independent identity in certain ways? What becomes invisible and what persists as kind of its own market and its own thing?
I think the issuers the brand of the issuers goes away, which is probably a controversial statement, but the existing market structure that we have today, which is a duopoly, for all intents and purposes, I don't think scales. I don't think is the optimal sort of steady state of this market. Other markets have not evolved that way. If you look at, I think it's less akin to the card networks, which does have this duopoly market structure, and it's more akin to, card issuance or check issuance, right? When we have a portfolio company that is focused on building a clearinghouse, and they talk a lot about like you have a multi-issuer model and a model that needs to connect to thousands and thousands of receiving institutions or fintechs or banks or what have you. If you just take $1 trillion of stablecoin supply, we'll get there at some point in the not too distant future. That means there's going to be $40 billion per year of revenue for issuers. That's a big number, and there's no way two companies are just going to compete over that. And if you think about how checks work today, like if I handed someone a check, they don't care the bank that's on that check. They know that they can walk inside their bank and deposit that check, and their bank does not need to have a bilateral relationship with the issuer of my check, right? So there's a clearing system behind the scenes that allows for the redemption of checks, and I think stablecoins will follow a very similar market structure model where the issuers frankly don't matter, and people are just moving value around, and the ability to deposit at their bank or at their PSP or their fintech provider, any issuer, and be able to redeem that at par. I think that's the future model of the stablecoin market.
Yeah, I think this idea of going invisible is an interesting one. I think I don't know who the software provider is for my bank account, for example, but I know what ACH and a check is, right? So it would be more around how a user would think about the rail that they're using and whether they trust it. And I think that there still needs to be that understanding of what an on-chain payment is. But I'm not 100% sure whether it really matters what the rail is, and I think there will be a lot of redundancy between fiat and stablecoin rails. I'm not a believer that 100% of everything will be done on chain in the next 5 years, but I think it would be good for the general public, users and businesses, to understand what a stablecoin rail payment is, like they do with checks and wires and others.
I agree with we're heading into an invisible world, and I touched on this earlier, but we'll see a convergence of stablecoins and fintech. Ultimately, if you're selling a financial product, you need trust. That's the first product. Everything else is upsold from trust. Deposit, lending, whatever it may be. It's all dependent on trust. To your point, no, I don't know what ledger my bank is using, and I don't care. I don't think most people care about, is it on-chain or is it off-chain? They want access to safe, stable, fast, and cheap money. That's it. And fortunately for all of us in this room, blockchains present incredibly fast, incredibly cheap, and incredibly safe, stable money. But that's what people want, and we can't lose sight of that. And kind of with that in mind, I think the two completely converge, and stablecoins and blockchain technology more broadly kind of fade into the background. We've got a portfolio company, Blackbird, that does this quite elegantly. You sit down at a restaurant, you close out your tab, stablecoins in the background. There's no seed phrase. There's no need to understand what's happening. It's a magical experience for everybody, and I hope we'll see more of that in the coming months.
And I'll add to that too. I think one of my favorite companies is Figure, and the fact that they've completely abstracted away that they're using a blockchain and that they've saved 150 bibs on a HELOC is incredible. I don't think most people care that it's on chain, and I think most of these things should be that way.
Awesome. And maybe one specific for you, Evie, then, and I'll bring this back to things that are happening in the US here, and maybe I want to bring it back to US monetary power. But in Africa, Latin America, stablecoin deposits in terms of dollarization are outpacing bank deposits now. Is this kind of a dollarization 2.0 that's happening? How do you actually see that happening in the landscape? You touched on governments and their perspective earlier of stablecoins. What's kind of the interface between this dollarization 2.0 that's kind of happening, and how's that happening internationally, and what impact does that have on just the U.S. writ large? I'd be curious for Mike and Adams' perspective too.
I'm not a global monetary expert by any means, but what I'll say is where you see the most traction is in countries where the demand for dollars far outstrips the supply. And that is a subset of the 150 plus countries in the world. And that fluctuates over time as well. Like, it's not always the same countries. And I think an example was a couple of years ago, the spread on the Naira was probably like 500 bibs. And then now it's like 50 bibs. So that kind of changes over time. I do think that central banks are, in emerging markets, especially in very volatile countries, are freaking out. They won't say it out loud, but they're really scared of not having currency controls anymore. And there will be some that will implement certain restrictions in different ways. They're not just going to let it happen. I do think there is an opportunity to bypass what I call the city-led sort of chokehold on supply and constraints. There's a lot of traders out there that are minimizing supplies and taking advantage of being sort of the central point of access in different countries. And I do think that certain central banks are open to the fact that they could work with other players that can provide them with other liquidity. I think there's also a lot of nuances with netting that I think companies like Wise and Tunes have been doing for a really long time, and they've also had their hands slapped before. So I think stablecoins are a new iteration of this balance between supply and demand, but I think generally it's not exaggerating it. I don't think someone in the Philippines can eat USDC. They still need their local currency, right? And I think we still need to continue to remind ourselves of that.
Yeah. How about you, Mike?
Yeah. A few things to add on. Just from like a geopolitical standpoint, just to like frame up what's happening, the U.S.'s number one export is the U.S. dollar, right? And stablecoins allow them to export U.S. dollars around the world faster than ever before. And the U.S. politicians know this and are leaning very hard into this, right? And so they are heavily incentivized to find new buyers of U.S. debt, and to be able to do that at the retail level is a new weapon that they have in their arsenal that otherwise they didn't have, right? So they will continue to push on stablecoins as hard as humanly possible, and local governments, and central banks around the world need to grapple with this. What do? They try to ban it. I don't think that works. And so I think the steady state for this will be to accept stablecoins and quickly convert them into local deposits as quickly as possible. We don't want stablecoins landing in self-hosted wallets. You want them landing in the banking system and converted to local currency, right? So like that is what's going to happen. I'm pretty sure. And so there's going to be a whole bunch of providers that pop up that are going to provide hosted solutions to banks around the world, catch stablecoins, convert to local currency, and earn the spread. That's FX, really juicy FX business. It'll be worth tens of billions of dollars in revenue per year. That is the opportunity for them to be a part of this transition and to not fully let it dollarize and have all of those deposits be sort of sucked out of the banking system.
I agree with that, Mike, in particular because I think we'll continue to live in a hybrid world for a long period of time. One of the reasons I believe we'll live in a hybrid world is governments will insist you continue to pay taxes in local fiat currency. Everyone pays taxes, so at least once a year you're going to have to convert some of your stablecoins into local fiat. And Mike, to your point, I think that the magical experience of swiping a card that's a stablecoin-backed card, but it's converting to fiat on tap or on swipe, things like that enable both magical experiences, enable folks to save in U.S. dollar-denominated stablecoins, and also enable local currency to continue to be converted in and out of the ecosystem.
Well, I think we're almost up on time here, so I'll do one more for the panel, and then we'll switch to Q&A. 5 years from now, what's your one bold prediction of what's happening in 2030 that we're maybe not thinking about now? I'll cross the moderator wall a little bit as well myself. My bold prediction would be that the bulk of the enterprise value will shift from issuers to networks, similar to Visa and MasterCard, $500 billion plus giants. The networks in this space are where the enterprise value is going to accrue as the space saturates. What do you guys think?
I was going to say the combined enterprise value of Visa and MasterCard, which is about $1 trillion today,
Trillion two.
is 50% of what it is today, which ties into what you were saying.
But they're all launching stablecoins. You're still going to short them?
It's so interesting. I don't. Yeah, it's a bold prediction. I'll go with that.
I think mine will probably be most multi-currency consumer wallets will be primarily stablecoin backed, and that'll be both local currency and also USDC.
I think 10 years from now, we'll see the credit markets, particularly the global credit markets, transform completely and entirely. Smart contracts are a way better way of managing facilities and of moving money both across borders and locally. And I think on an exciting point, particularly when we look at emerging markets, this could mean that global investors and global institutional investors are able to pour capital into not just US and UK debt and credit markets, but they're able to do so in every corner of the world.
Awesome. Probably have time for a few questions. Go ahead.
So I was interested in your thesis that the local government wants taxes paid in local currency. Revisit that thesis, assuming that the people prefer a dollar-based stablecoin. Why would the government prefer a depreciating local currency versus dollar?
It's a good question, and I think a lot of this comes down to the government's belief that their currency will go up, especially relative to the dollar, and the desire to maintain control of that. It's somewhat akin to startup founders and their view of their own equity and their desire to maintain control of their own board. I think there's a similar psychological effect that kicks in there. Whether right or wrong, I don't know, but I do believe that will continue to be true for some time.
Go ahead.
Mark, can you just explain a little bit more why you think Visa and MasterCard are where they are today?
So if you think about the stranglehold that those two businesses have on card payments around the globe, there's a sort of half measure here where we described users to be able to hold stable coins, hold their value in USDC, USDT, and then swipe their card and be able to convert that stable coin into fiat and settle a transaction, right? The merchant doesn't know anything about stable coins. It settles just like a traditional card transaction. I don't know if people have noticed, but if you look on the bottom of most of your receipts nowadays, at least mine, living in New York, the 3% surcharge is popping up more and more and more. Look at your receipts, right? And you're going to see the merchants passing along the pesky 3% that they're being charged by their card network to the end user. And there isn't a lot of good data about this or how prevalent that is, but it's going up a lot, anecdotally. And people start to realize that and want to build a direct relationship with the merchant. And that could look something in Asia that looks like people walking in and, taking a picture of a QR code and sending a transaction from my wallet to the merchant's wallet. And you know who gets cut out of that? The card networks, right? So I don't know. Visa and MasterCard have always taken the approach of embracing alternate payment methods, which is don't know if anyone in Visa or MasterCard in the room, but like that looks a lot more like a professional containment strategy, right? It's like, yeah, we're going to embrace it, but we're going to like keep our finger on it, right? And I think stablecoins, they're going to try to keep their finger on stablecoins. To CJ's point, everyone's, they're launching stablecoins and they're not asleep at the wheel, but stablecoins could have escape velocity that they can't really manage. And so we'll see what happens there.
Maybe I'll add, I think the FX business for these Visa and MasterCard is also going to slowly go away. And if you look at their revenues currently, it's a pretty big chunk of where they make money. And now that there's alternative settlement flows that can go through stablecoins, that margin is going to compress quite a bit.
I know we're trying to wrap, but Mike, I think you're bringing up a really important point here. And if we all close our eyes and imagine that Visa and MasterCard do go away, and along with it interchange, the ripple effects are profound. I'm not nearly smart enough to unpack all of those, but the amount of things that interchange pays for in the world is massive. Airlines are credit card companies. Delta wouldn't be able to do what they do without the credit cards that they are selling and without that 3%. You pull that out of the ecosystem, and the ripple effects here could be pretty profound.
I do think you're going to see adoption happening in emerging markets. Like the last place I would expect adoption would be in the U.S., given the economics of interchange, how juicy it is, all the different tie-ins and lobbying organizations that are going to be focused on that. The economics are much more disruptable overseas than they are in the U.S.
All right, well, let's give it up to Mike, Evie, and Adams. Really appreciate you guys. For any more questions, you guys will be mixing around. Feel free to find an after, but really, really appreciate you guys coming out. Thank you.
Thank you.